Hi, Tony Sycamore here, Senior Market Analyst at IG in Australia. US stocks closed a turbulent week in negative territory after the White House confirmed that tariff announcements would proceed. Over the weekend, President Trump declared a 25% tariff on imports from Mexico and Canada and an additional 10% tariff on China. The 25% tariff rate against Canada and Mexico is effective from this Tuesday, contradicting prior reports of a 1-month implementation period. It also included the threat of further tariffs if countries retaliate and a 10% tariff on China when the market had expected China to be part of a later stage of tariff implementation. Additionally, Trump said that tariffs on Europe are imminent, which leaves a trade war potentially developing on a number of key fronts. If these issues aren't quickly resolved, it may lead to reduced global trade and higher inflation, creating challenges for equities while also benefiting the US dollar and gold. Let's take a look at the charts of the S&P 500 and the Nasdaq to see where they are as they start this new week. Okay, so after the DeepSeek inspired pullback at the beginning of last week, we had the potential of a double top in place here in the Nasdaq around 22,000-ish. It was about 200 points out, but in the grand context of the Nasdaq, we're happy to look at this as a potential double top here. And while we see the Nasdaq holding below here, we think there's a good chance to test this low from last week before pulling back into the support provided by this mid-January low coming at 20,538. I think that level probably breaks. It's also reinforced by this 20,300 band of lows just here in mid-November. But my view is that we break this band of support and then get in towards a firmer region of support, which is the 200-day moving average coming in around 19,800-ish. And the uptrend support, which we've been following for a long time, going all the way back until December 2022. You can see it picks up a couple of points on this chart. And right now, it's coming in around 19,500. So my view is that this correction should continue to develop lower into this support band. Of course, if this support band goes, the next downside target would be 18,800. So in a nutshell, we're calling for a deeper pullback than what we saw last week. And obviously, the NASDAQ futures have opened lower around this area here, testing this support at this point of time. A break below here probably suggests we're on the right track. We will stay with the tactical short view here while the NASDAQ remains below this 22,000 area. So give it 200 points, 22,200. While below here, we think there's room for the downside in the NASDAQ to be explored. For the S&P 500, well, it was interesting because what we saw last week was the S&P, or actually last 2 Fridays ago, it made a new high. The other indices, the Dow Jones and the NASDAQ, failed to do so. So we got some divergence there amongst the key 3 US indices. And what I think happens now is similar to the NASDAQ in terms of the S&P trades back to this 5770, 5800 support area. This is coming from the Fed's pivot back in October 2023, 4,103 here is the relevant level. And that is also coming in at this 5760-ish to 5770-ish area, which picks up this low here from mid-January. Of course, not far below here is we have this 200-day moving average coming in just above 5,600. So base case here is the S&P can potentially marginally break the uptrend support and then test this 200-day moving average. Of course, if we were to see a break of the 200-day moving average, lots of alarm bells then ringing, break of uptrend support, break of the 200-day moving average. We can look towards this September low coming in around 5,400, potentially down towards this August low at 5,120-ish. Thanks for listening and have a great week ahead.